The very best way to create epic cash flow is to own quality dividend stocks and sell covered call options. Yes, you can absolutely be highly successful by just owning quality dividend stocks. And we've talked in length on this channel about how the power of compounding dividends over time is truly remarkable. However, if you add in option premium above and beyond your compounding dividends, you get truly amazing results. It's the shot of espresso to your morning coffee, the nitrous to your race car, and the light speed to your spaceship. In this video, I want to share with you 5 different quality dividend stocks that have great option premium right now, yes, but also the ability to find these quality dividend stocks yourself. When we talk about selling call options, we do have to have 100 shares of the stock we want to sell call options on. And your first thought might be, maybe I don't have enough money to get started, but make sure to stick around all the way to the end because I've got a dividend stock for you that yields over 5%, has been paying dividends now for 10 plus years, and you can get started for as little as $1,255. So where do you look for quality dividend stocks that also have good option premium? I went through all of the underlying components of the Schwab US Equity Dividend ETF, SCHD, 104 different holdings, and it's a great dividend ETF, very balanced between capital appreciation, dividend growth, and dividend yield. This specific ETF's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. What I like about looking at the underlying holdings for this specific ETF is they have very clear criteria on the underlying dividend stocks in the ETF. Let's take a look at those. We're looking at the prospectus for this specific ETF, and it talks about their principal investment strategy, but also all of the underlying dividend stocks here. The 100 component index is a subset of the Dow Jones US Broad Market Index, and it excludes real estate investment trusts, master limited partnerships, preferred stocks, and convertibles. And if we look here, it says all index eligible stocks must have sustained at least 10 consecutive years of dividend payments, have a minimum float adjusted market capitalization of $500 million. In other words, the company must be worth at least $500 million and meet minimum liquidity criteria. They then look at this subset and the highest dividend yielding stocks based on 4 fundamentals based characteristics: cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. So with this, we have quality dividend stocks as part of this ETF, and it's a great starting point for us to say which of these dividend stocks actually has great option premium as well. I went through all 104 different holdings. A lot of them didn't have good option premium, or they sold on a monthly basis and they just didn't have a lot of volatility or volume. However, I did find some great options, so let's go ahead and take a look at those. All right, in this spreadsheet, we're taking a look here. We're gonna have ticker symbol, dividend stock, the percentage of assets in the Schwab US Equity Dividend ETF, SCHD, their current price, how much cash would be required if you bought 100 shares today, what the 30-day premium at a 20 delta is, I'll explain that in just a second, the yield on that required cash, and their current dividend yield. Now, when I say 30-day premium at a 20 delta, 30-day premium meaning I'm looking at options that are 30 days out. They will expire in 30 days, which essentially is July 29th. Now, what do I mean when I say a 20 delta? The official definition of delta is the amount by which the price of an option changes compared to the actual price of an underlying stock. You could potentially have a rough definition where you say that, the option delta is the likelihood that an option will end up in the money. It's a very rough definition. It's not a great way to put it. As we look at this example from Aflac, we've got the call options right here. Here are our strike prices, 52, 53, 54, all the way up to 60 here. The at the money price, see, the price is $56.53. So the at the money is right here, and you'll notice that's the split right around 50% here. Way in the money is gonna have a much higher delta at 0.87 versus way out of the money, right? Because it's 56 versus 60. This is much higher than the current price of the stock. This one has a delta of only 0.12. So in a rough way, you can say that it's less likely to be in the money with this lower delta, but it doesn't necessarily mean it won't be at the money at expiration. So when I say a 20 delta, I'm looking out of the money, right? So I'm not at the money here. Even though I could get more option premium right here, it's more likely I'm going to have the stock assigned and it will get called away from me. So I'm looking at a delta right around 18, 19, or 0.18, 0.19, or 0.20, right around here. So what I'm doing here is I'm looking at whatever this premium I can get right here for this delta, and we're looking at how much cash is required, and that's how I get the yield. The amount you can get divided by the amount of cash required to get that premium gives us our yield. So number 6 here on the list, we've got Whirlpool Corporation. Whirlpool. It's hard to say that word. Ticker symbol WHR. It only makes up 0.34% of the assets for the SCHD ETF. It's got a price per share currently of $164.07, subject to fluctuation throughout the day. And then we've got essentially cash required though of $16,406 to own 100 shares. And I can appreciate that's a lot of money. So this one might not be as ideal, especially for a beginner investor who's just getting started, doesn't have as much assets to be able to put into one holding for $16,000. It's got a current dividend yield though of 4.28%, so it's actually a great buy even if you don't do it for the option premium. Good dividend yield here for this dividend stock. And we've got a 30-day premium, so 30 days out on the option at a 20 delta, an out-of-the-money call option. We can get approximately $215. This is right in between the bid and the ask on that option. So when we factor that in, it's a yield on required cash of 1.31%, which is pretty good. And with Whirlpool, we have a $7 annual dividend. Now, just factor this in here. If we have a premium of $215, and let's say we can earn that every month, right? Just putting aside the fact that every 5 or 6 months statistically we would get assigned. Just putting that aside for a second. If we take this $215, right? So $7 times 100 is $700 annual dividend, okay? Or $700 annually. We're looking at almost matching that in just one quarter. If we take this $215, let's say we can earn that conservatively at a 20 delta, right? So we'll take equal to $215 and multiply it by 12. That's $2,580. That is almost quadrupling the dividend income. So you can see the potential here with these dividend stocks when we add in the option premium. All right, next up on the list here we have International Business Machines, IBM. It makes up 4.2% of the assets for SCHD. Got a dividend yield right now of 4.77%. It's got a price though of $142, which means it would take $14,000 to make this work, which again, I recognize is a constraint on most investors. You can get $190 for that option premium at a 20 delta for a 30 days out strike and for a 30 days out option, and that yield on required cash is 1.33%. And they've got a current dividend yield of 4.77%. Now you can see here we've got annual dividend income for International Business Machines of $660 per share or $660, and with this option premium, we would have $2,280 earned, which you could use to either reinvest dividends, you could buy other dividend stocks, or just keep the cash for yourself. All right, next up here, number 4 is one that I actually own in my own portfolio, and that is Best Buy. Ticker symbol BBY. Now this one only makes up 0.55% of the assets for SCHD. The price per share is much lower than the others at $70.07 per share currently, which only means you need $7,000 in cash. Now, still a lot of money, but a lot less than the other two. And you can get option premium of $100 at a 20 delta 30 days out, which is a yield on cash of 1.43%. And this stock yields 4.94%. It's one that is really at a discount. And just to give you some perspective, if we look at a modified yield, if we factor in this option premium as a dividend, which it's not, but if we factor that in, look at this yield here. Instead of 4%, you're getting like 20% if you factor in this income here. We're going to come back to number 3 here because that's that special value one. We're going to end with that one. Let's go ahead and move to number 2 here, and that is EOG Resources Incorporated, ticker symbol EOG. Now, this makes up 2.22% of the assets for SCHD. It's got a price of $117 a share, and cash required, that means for 100 shares would be $11,703. You can get a 30-day premium for a 30-day option at a 20 delta. You can get $175 right now between the bid and the ask. And that means a yield on required cash of 1.50%. With a $3 annual dividend for EOG Resources and factoring this option premium, this gives us a modified yield of 20.51% when factoring all of this extra option premium. Number 1 on this list here is Valero Energy Corporation, ticker symbol VLO. Now, this one makes up 1.46% of the assets for SCHD, and it's got a price of $115 per share, which means you need $11,517 for 100 shares. Now, you can also get $175 on the option premium here with a 20 delta out of the money, right, for Valero Energy, and that gives us a yield on required cash of 1.52%. Valero currently pays a dividend of $3.92 per share annually, and when you factor in all of this extra option premium as part of the yield, you get a modified yield of 21.63%. All right, now lastly here, we're going to look at this number 3 here. Even though it showed up as number 3 based on yield on required cash, this is the special opportunity because it's got such a low price per share that just about any investor out there can get started very soon in selling options. Here we got it. American Eagle Outfitters, ticker symbol AEO. Now, granted, it makes up only 0.07% of the assets in SCHD. However, the price per share is only $12.54 per share, which means you only need $1,254 currently, right now, today, in order to start selling options. Now, with this low price per share, you can see that the only option premium you get is $18 for a 30-day out of the money strike price. However, it's still $18 based on this yield, which means it's a 1.44% yield on required cash. Current dividend yield is 5.65% as well. So when you factor in that the annual dividend right now is 72 cents per share based on this price and this dividend stock, and you've got annual dividend premium potentially of up to $216 based on all the criteria we talked about, it takes us to a modified yield of 22.97% with American Eagle Outfitters. Whether you're a brand new dividend investor looking to start selling options, or you're one that's very experienced and you have access to all of these different dividend stocks, these are some tremendous opportunities to accelerate the growth of your portfolio. Yes, there are times when you might get assigned on your option, or you might need to roll your option and actually skip a month in premium, but it's worth it. You get so much premium from this. There are so many different opportunities available, guys. Here's just 6 different dividend stocks here with great option premium and great opportunities for you. Make sure to leave your 2 cents down in the comments below. I respond to all comments I receive on the day I post a new video. And that's all I got for you guys in this video. Have a great rest of your day. And please continue to stay healthy, both physically and financially. Have a good one.